Hey, are you a business owner that pays over $7,500 a year in tax? If so, you're gonna wanna watch the rest of this video. Hey, my name is Ronnie Lambeth. I'm a certified FICO credit professional and a tax strategist. And for now, the last 20 years, I've helped entrepreneurs just like you maximize their credit, minimize their taxes, and multiply their assets. And I've done this by understanding the law and how it applies to you and your business. In fact, what we do here at Fortress is we restructure your entities. We change them from your standard S corporation that your CPAs are pushing you into doing. And the reason they want to push you into the S corporation is to get to charge you an extra $1,500 to $2,000 to file the extra tax return that really is not required. See, LLCs don't do a whole lot. Actually, LLCs don't do anything for you when it comes to tax reduction. They help protect your assets. Then you have your S election, which this is what CPAs are pushing now on social media. What that does is, yes, it can reduce your self-employment tax, but the IRS doesn't give you a free lunch. Because if you have a S election on your LLC or your corporation, you have to take a reasonable salary. Now, what's a reasonable salary? These CPAs will tell you it's 30 to 40% of your gross revenue, blah, blah, blah. Well, there's nowhere in the Internal Revenue Code that says any percentage. It says reasonable salary. So if you go to Google and you type in, what is the reasonable salary of a CEO in all 50 states, you're gonna find it's over $100,000. And if you're a CEO, say in Silicon Valley, and you type in what's the average CEO wage in Silicon, it's not 100 grand, it's way over that. So what I'm told is the number one reason that corporations are audited, the number one reason that business owners are audited that are S election is because they're not taking a reasonable salary. And it's on the front page of your tax return, W-2. And if it's blank or if it's a small amount compared to how much the profit is, you, my friend, are probably gonna get audited. And when you do, you're most likely going to lose. So what can you do? Well, if you understand how the Internal Revenue Code works and the Uniform Commercial Code works, and you combine those two together, you will find you can go from a 68% tax bracket. That's right. If you live in California and you make over $1 million a year, you're paying 68% tax. That's insane. Absolutely insane why you would stay there or why you wouldn't change your structure. And I suppose the reason is because you don't know any better. Well, now you know. There's actually a way that you can take it from 68% all the way down to 15%, saving you hundreds of thousands of dollars, potentially millions of dollars over your life or over your career. So if you're an entrepreneur that's paying over $7,500 in taxes and you want to learn how to save money, comment on this video the word tax, and I'll send you my private link to my calendar, and I'll show you exactly how I take clients that owe thousands or hundreds of thousands of dollars to the IRS, and we cram it down to a few $1,000s. So if you pay over $7,500 on your income tax and you want to pay less, comment tax on the video. We'll have a chat. Have a good day.